Welcome to another S&P 500 analysis. Today is November 11, 2022. You are looking at the price reaction by the E-mini S&P 500 future contract, the ES, the minute after the latest CPI was released at 8:30 a.m. Eastern Time on Thursday. The futures spiked 109.5 handle in less than a minute, and that is equivalent to $5,475 move in a single minute per contract. Now, since Thursday, the S&P 500 cash index has gained over 200 points. So is this another bear market rally, or is this the beginning of a new uptrend? In this S&P 500 analysis, we'll review the market sentiment, the market internals, and the price action of the S&P 500, along with the other major market indexes, and see what the market is telling us. We'll also look at the 10-year yield, the US dollar, oil, silver, and gold to see how they are doing. Stay tuned. Here's the weekly look of the S&P 500. We had a range of over 257 points and gained over 220 points, or 5.9% for the week. It reverted back to a one-time framing up and also closed sandwiching between the 10-week and the 40-week moving average, and is still in a lower low, lower high price pattern. Looking at this chart here, we see on Thursday, the S&P 500 gained over 5.5%, or a little bit over 207 points. And on Friday, it gained another 0.9%, almost 1%, and another 36 points. And notice that the VIX been coming down since the October 24. And right now, it is sitting at 22.52. And the put-call ratio was up above 1 a couple days ago. And then on Thursday, it came down close to that 0.75, and today actually dipped below it, and it is sitting at 0.67. Definitely, the market participants are feeling less fearful and a little bit more risk on. Also looking at the up-down volume ratio, we noticed that on Thursday with the post-CPI release, there was a 6.6 to 1 in favor of the up volume. And the daily advance decline, the advancing issue was leading the declining issue by a margin of 2,525. Then on Friday, it was 967 more advancing issue than declining issue with a up-down volume ratio of 3.3 to 1. So the rally is a little bit weaker, and also the advance decline show is not as much of a broad market participation on the Friday rally comparing to the Thursday post-CPI reaction. Now, the interesting thing to know is the new high, new low. We actually saw on Thursday and Friday, there were more new 52-week high than 52-week low. So that hasn't occurred for quite a while, since back in August. And the New York Stock Exchange cumulative AD line is coming up along with the S&P 500, and they both made a higher high. And looking at the Nasdaq 100, as you can see, the Nasdaq 100 gained over 800 points, or almost 7.5% on Thursday after the CPI release. And on Friday, it gained another 1.8%, or 211 points. Notice the up-down volume ratio on Thursday, it was almost 14 to 1 in favor of the up volume. And the advancing issue outnumbered the declining issue by 2,857. So that was quite a strong move and broad market participation. Now on Friday, the up-down volume ratio is only 3.7 to 1 in favor of the up volume, and the advancing issue outnumbered the declining issue by a margin of 1,530. Now the Nasdaq market, as you can see, there were 148 stocks make new 52-week low on Friday, and 114 make new 52-week high. So the margin is only 34 more stock make 52-week low than 52-week high. Now the Nasdaq cumulative AD line is not accelerating or coming up as quickly as the cumulative AD line in the New York Stock Exchange. Notice that the Nasdaq 100 spiked up and made a higher high, and the cumulative AD line is sort of kind of matching the previous high. So it's not as robust as the cumulative AD line in the New York Stock Exchange. So it kind of tell you that there is not quite as broad market participation in the Nasdaq market rally, and that's kind of indicative that again is being dominated by those large cap tech stocks. So from the sentiment, we're definitely seeing the market participants are getting a little bit more risk on, although the VIX is still indicating that they are in a cautious mode. The price action appears to tell us that it might want to go higher. So in the next section, when we look at the price action of the indexes, we'll see what are some of the levels to keep an eye on in the coming days. Now let's take a look at the price action of the S&P 500 on this daily chart. First of all, on Friday's close, it is still 17% from its all-time high up here. And in addition to that, the price closed above the upper range of the weekly expected move. So it's outside of the weekly range. And for next week, the upper range of the weekly expected move is between 4105 and 4085.50. And the lower range is between 3900.40 and 3870. Looking at the upper range, it is pricing it to be near this trend line here. So the market appears to be pricing the move to come up to this 4100 area or a pullback to the 3900 area. Okay, so that's what the market is pricing in. In addition to that, I'm also going to use the Fibonacci extension tool and also map out this symmetry move between here and here. So you can see this 100% measure move is somewhere up at 4117. So again, it is in confluence with this 4100 area and also this upper trend line. So with that, it appears that the market is pricing a lot of this stuff in for this 4100 level. So I would not be surprised to see that being targeted for the coming week. So that's basically what we are looking for. You know, maybe we could get a bounce pullback from the Friday's close into the 3900 and maybe dip into the lower range and then get a bounce back up and target that 4100 for the end of the week monthly option expiration. So that's a possibility. Now, if it dipped below this range here, this lower range, we could see it come down and fill this gap, and that is still basically coming down to this 38.15, this 38.2 Fibonacci retracement, and it's still within this particular, little bit of a channel, this upper channel or the upper wedge. So that is something to keep an eye on, is this gap here. That's the CPI gap, right? That's Thursday CPI gap. So wouldn't be surprised to see it possibly come back and fill this gap before we get another push up to this 4100. So look for a pullback and possibly a continuation push upward, because this line here and the 4100 appear to be a target or a magnet that will pull the price up there. And looking at the Nasdaq 100, you can see that it is still 29.5% below the all-time high at the Friday's close. Now also the price is closed above the weekly range and above the upper range. It closed right near this 50% retracement, somewhere near this 17,768. So it closed at 11,817. Now the next week's upper range is somewhere up here at 12,227 and 12,156. The lower range of the expected move is between 11,475 and 11,375. Now, once again, similarly to the S&P 500, it appears the market is pricing in a move, the expected move up near this trend line here at this 12,300 area. And you can see that right now the price appears that it is, trying to come up to this trend line. So again, on the pullback, we essentially are looking at this 11,500 area. So we possibly could see a pullback into the lower range before we get a push up toward this 12,300 area, up to this trend line here. And also beware, there is this gap here, the CPI gap, and that will bring it down to somewhere around 11,000. So there could be a possibility that we could come down, fill this gap, and then push up, or push up, and then later on, maybe not next week, but sometime in the near future, we could sell off after tag this trend line and pushes down and fill this gap here. And here's the Russell 2000. As you can see, this trend line here that actually tagged this trend line on Friday, and also getting close to this 1910 area. Basically, it is this major move of this low double bottom type of a pattern here. So we could see a little bit of a pullback next week from the Russell 2000 and see this gap. This is the CPI gap, and get filled down here near this 1800 area, and then see would it be able to continue to hold this trend line here and bounces back up. If it breaks, then look for this 50% retracement area down here near the 1700 area. Now looking at the Dow Jones Transportation, we can see that the Dow Jones Transportation actually traced out this major move of this triangle here this week, and it popped to this trend line. In addition, as of Friday's close, it is just a little bit under 20% from its all-time high. So right now, it's trying to sneak back above the bear market, away from the bear market territory, but it is bumping up against this zone here. So I would not be surprised that we see a little bit of a pullback next week and possibly come back into this 38.2 retracement level, somewhere around 13,700 area, and see what it get a bounce here. Because we also have this trend line coming down, so there could be a possibility of testing this trend line and then maybe get another bounce and come back up above this 14,500. If it could get above this 14,500 area, then watch this pivot high here up near this 15,300 area. And if we get above that, then look for the potential resistance up here at 15,700. Looking at the Dow Jones Industrial, we see that the Dow Jones Industrial is only 8.7% below its all-time high. So it is definitely one of the strongest index. But on Friday, it printed a hangman type of a candle. So that could be a clue that it is getting ready to do a little bit of a pullback. And I wouldn't be surprised to see this gap get filled next week underneath this 33,000 area. Now, if it continues to push up, then look for this push up above this 34,000. And we do have a major move here, this symmetry move at 100%. That would be somewhere around 34,600 area. So keep an eye on that level, essentially this 34,500 above this zone. Now, if it is pulled back, we see first off, we mentioned that this gap could be filled. And then we could, if it do a little bit more substantial pullback, we could see this 32,000 area at this zone to get back tested. So keep in mind that this candle here is not a very bullish candle typically. And for the New York Stock Exchange Composite Index here, the composite here, we're also looking at this major move here, and it is getting close to this 100% major move up here at 15,430. Now it is coming up toward this trend line here at 15,600 area. So keep an eye on this possibility of coming up to this trend line. Now the New York Stock Exchange Composite is only 12% below its all-time high. So second best compared to all the other major market index. The Dow Jones Industrial is the best performer so far, and the New York Stock Exchange Composite is the second. Right now, we're basically looking for a possibility of a pullback here to this 15,000 area, and then maybe we get a bounce up and try to tag this trend line. The other possibility is the other way around, right? Come up to this trend line, get rejected, and come back down to test this 15,000 level. Those are the indexes, and looks like the trend line here for the S&P 500 and for many of the indexes, it is acting as a magnet to pull the price up there. Looking at the 10-year yield, as you can see on the 10-year yield, we had a little bit of a pop above the 4% after the FOMC announced 75 basis point hike. Then when the CPI came out on Thursday, notice that came back down and dipped below the 4% and sitting right near at this 3.8%. Now on Friday is a Veteran Day, so it's a holiday, it's a bank holiday, so we did not get any movement on the yield from the 10-year bond. And here looking at the US dollar, notice that the US dollar came down on Thursday after the CPI release, and today continued to move down and sitting at 106. So we were looking for a little bit of a support here in this confluence on this channel, or what it appeared to be setting up a bull flag. But as you can see right now, it dipped below the supporting trend line. And right now it seems to be sitting right near this support area. So we'll see, would we get a bounce back up next week above this 109, or would it come down and test the support down here near this 105 area and possibly even come down to this 103. And with the weak dollar, we did see a little bit of a bounce from the crude oil. We saw the oil came back up and closed at 88.86 on Friday. So right now, we still continue to monitor oil to come back up and possibly get back up to the 90 and move up toward this 106 area. And with the weak dollar, we also saw the precious metal market rally, and we can see this on silver. Remember, we also was looking at a support down here at 18 level, and it got a bounce. And we're saying that if we could get above this zone here, this little bit of a low volume zone near the $20 area, then we can see it move up to this 22. So for the coming week, watch this area here on this 22. If we could get above this 22.38 or 22.50, then look for a possible move up to this area here, somewhere between 24 and 25. But if it doesn't and could not get above this 22.50 and starting to come back, then look for retracement back down to this 20 area. And if that doesn't hold, then we'd be looking at a retest somewhere around this 18 level here, between $18 and $19. And likewise for the gold market, the gold also got a spike up due to the weak dollar. And as you can see right now, it's got back above this 1720, and right now seems to be moving toward this 1800 level. So keep an eye on this to see would it auction up to this 1823, this high volume area, basically this composite volume profile point of control somewhere up at this 1820 area. But if it come back down and dip below this 1700 level, then look for a retest or possibly back here at 1650. But right now, with the dollar continue to pull back, we probably would see gold and silver continue to push higher. Now, here are some of the report to pay attention to for the coming week. The PPI release on Monday, the retail sales on Tuesday, and the FOMC minutes on Wednesday. Then we have the GDP on Friday. So especially the FOMC minute and also the PPI on Monday could be a market moving event. So be careful of those and pay attention to those report coming out and see what the price reaction is. If you'd like to see additional content from me, be sure to visit my Substack page, and the link is smtraderCA.substack.com. I do post additional material there. For example, a couple of days ago, I posted my analysis of the 11th sector in the S&P 500, and also some of the earning reactions and some other information relative to trading other than just looking at indexes and analysis. Go and check it out. And be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.